Hello everyone, welcome back to Fundrise Finance. The month of October in the markets was pretty choppy once everyone thought that the S&P 500 has found its breath after September, where it lost almost 5%. From middle of the month, that's towards like October 17th and onwards, that's I would say last third of the month, saw a steep decline in the market of more than 4%. The volatility was also pretty high, with the VIX hitting almost 22 towards middle of the month. The fear and greed indicator, which is currently at 33, shows that the market is still in a very watchful mode, not sure where to go among all the geopolitical news that we get every day from the Middle East. So among all this negative news that flowing around, I was still able to make some profits by selling options carefully and make some money out of it. And that's what I want to discuss in this video, that how much my portfolio made as options income for the month of October. So without any further delay, let's check it out. So this is my Google Sheet tracker for all the option trades that I do. To quickly start off, what I have in the sheet, first we have the stock on which we have the options written for, then the option strategy, whether it's a covered call or a cash secured put, the quantity, when the contract was open, what's the expiry date, when it was closed, how many days left until expiry, how many days I was in trade for that contract, what's the current price of the ticker, how much did it change for the day, gap left between strike price and the current price. Then we have the amount received section, which has first we have the strike price at which the contract was written, was the action taken, how much premium I received, total amount, and the commission and fees and final value. Likewise, we have the amount paid section, which likewise has the action, the how much premium we paid, or the overall amount, that's including the commission and fees, and finally the profit and loss. And then we have how much is the amount committed. So if it is a covered call, how much did our 100 shares cost? And if it's a cash secured put, then how much did we put up as collateral? Then we have yield to strike. So that's like how much premium we received when opening a contract compared to the strike price at which the contract was opened. If it's more than 1% and we're able to successfully close that particular trade, then that's an awesome transaction. Return on capital, likewise, annual return on capital, and any comments that we want to capture. And just to keep myself honest, how much do I have gain after considering the taxes that I have to pay, because anything you earn from options is taxable. So we have to keep ourselves honest there. Coming to the trades, we had quite a few trades which were open from the month of September that we had to close, like the one from Ford, whose expiry was towards the middle of the month, it was like October 28th, but we were able to close it much earlier than that because the automobile stocks like Ford, GM had fallen pretty bad in October due to the worker strike. So I was able to close this contract much earlier, netting me a profit of over $10. Then we had contracts from Citigroup. Likewise, I was able to close it almost 2 weeks before that. It was supposed to close on October 28th, but I was closed on October 5th, netting me over $18. Likewise, Lucid giving me over $7. Then Bank of America, I was able to make over $11 on this. Then we have Medical Properties, which netted me over $6. And we have SoFi, which we closed to get a profit of $7. Then Conagra, one of those rare trades which I let expire, which is what we see here as EXP as the action, letting me a profit of over $24. And we have Verizon that I got to close more than 2 weeks ahead for a profit of over $6. The last of the holdover trades was on SiriusXM, which I was able to close for almost $5 of profit. For the new transactions for the month of October, we wrote another covered call on Ford to net us almost $4.5. Likewise, Citigroup for a profit of over $15, and Lucid for a profit of over $7. Bank of America and Verizon here, netting us a similar amount of over $4.5. Now, Microvision, that's like one of the bummer stocks in my portfolio, which I'm just trying to gain some profit through options, giving me here a profit of over $6. Then SCHD, which I did complete having 100 shares of it in the month of October. I wrote my first covered call on it and let it expire, giving me a profit of over $9. Then I had a contract on Verizon, which I still feel I should not have done it. So what happened was Verizon had actually announced its results that week. That made the stock pop up almost 10%, and that overshot my strike price. And so I had to roll it to take an instant hit of $4. So I closed it for a loss of $4 and opened another one But what happened was towards end of the month, you can see Verizon just kept rising higher, and that made me roll that transaction again. So I closed it on the 27th and opened another one, which is still a transaction that's in the danger of being called away. So yeah, we have to manage this particular trade very cautiously because my cost basis on Verizon is close to 37 bucks. So if I don't manage this properly and if it does get call away, I would lose close to 400 bucks on this one. So yeah, one of those trades which I need to manage carefully. So other than the Verizon trade, pretty much everything else went as per the plan. Here we can see another one on Conagra, which I let expire for a profit of 10 bucks. Then another Ford, which expired for almost 5 bucks in profit. The thing is, I have a fixed profit level of 75%. So whenever I open a contract, I set those details in here, and my suggested sell column will tell me how much should I raise the buy to close transaction for. So it keeps me honest. Many people are happy with 50% profits. If you go almost until 80% or 90%, I'm good at 75. That's like a sweet spot for me. That's where I have all my buy to close transactions raised on. Yeah, as you can see here, there are a few open transactions that are expiring in early November. You can see medical properties is like more than 20% away from its strike price. Likewise, Macrovision almost 25% away, so I should be good there. Verizon is more than 6% than the strike price. Like I said earlier, I need to manage this carefully. City and Bank of America are fairly safe at this point, but you never know when the markets turn. Need to manage them carefully. So considering all the trades, I finally made almost close to $177 for the month of October with a return of 1.1%. So yeah, after below par performance in September where it was less than a percent return, I'm happy to say that though the markets were negative more than 2% for October, at least my options portfolio was able to generate more than 1% in the green. You can see the maximum that we reached was in June for $667. So that's like 5.15%. Well, that was like a freakish month. After that, we saw a dip in August at 1.29%. Then September it was below 1%. Now we are back up at 1.1%. So yeah, so I hope this upward journey continues nicely and we make another peak very soon. So let's see what the next few months hold for us. We will be cautiously writing our contracts. Yeah, that's all I have in this video for you all. Hope you all found some value from it, and I would really appreciate if you hit the like and subscribe buttons so that YouTube can suggest this video to many more people out there, and that will really help this young channel. Until we meet in the next video, let's try to do as much as possible to be financially healthy and keep taking those small strides towards financial freedom. See ya.